Hello everyone. In this video, I'm going to answer the question what I'm doing in the current falling markets. And the answer is I'm doing exactly what I always do. I'm buying the index. And I want to give this answer, and I wanted to give it in the first 10 seconds so that you can focus on your work, on your business, and your revenue streams instead of thinking too much about your portfolio. Whenever the market is falling, there are all of these influencers and YouTubers who will tell you how they made a lot of money on a particular stock, how they doubled their money on Zomato, for example, how they tripled their money on Tata or Adani or whatever. But the point is that this is the time where you could double down on your investments just on the index, because most of the stocks are falling. And if you start picking individual stocks, you don't know when they'll recover, you've not done your background research, you don't know much about those companies. I would say 90% of people will not be following a lot about a particular company, would rather be just understanding that I need to make my income so that I can park my money in safe investment assets. And when it comes to equity, which is already considered a risky investment asset, the safer thing to do is to basically just buy the index. So let's look at what I'm doing with that background set. I would definitely encourage people to not get distracted by all of these videos of which stock has fallen so much and which stock to buy and so forth. I'm still staying away from all individual stocks. I'm going to invest another 6 lakhs very soon. I've just transferred the funds to my account so that I can look at my total account value and hit the 4 CR threshold. What I'm looking at even more importantly is the amount that I've invested, right? So let's go through the holdings first, and then we're going to go into the investment as well, right? So obviously the portfolio is super down. It was around 30 something percent up, I think in the previous video, and now it shows 11%. It doesn't matter. That's the important thing. You have to be disconnected from this number. And I'm so disconnected from this number that when I saw all of these comments about what are you doing now, this is happening, that's the actual time that I actually got back. And also because I was traveling for 2 or 3 weeks. But this is the number that I'm more interested in. So this is currently 3.54. It's going to become 3.6 after I put in the 6L. This is my dream number. I want to increase the invested amount as much as possible, right? Of course, the present value will reflect just in proportion to the invested amount. And I know that in the long term, India will grow as an economy and the index will grow. That's about it. That's all you need to know. So you don't have to worry about the market going up and down and volatility unless you have a bunch of individual stocks in your portfolio, which is actually when you need to worry about all of those things, right? So you can see that a lot of my investments are just basically back to where they were, and it doesn't matter, right? All that matters is I keep investing. That's the core message that I want to give, right? So if you look at the top 10 investments, we have the mid cap 150Bs, which is now just 3% up. I remember seeing this in 30% and so forth returns. Next 50, we have the Nifty 50, the Nasdaq 100, which I have seen like at a 90% improvement as well. So my top indices that I invest in haven't changed, and I keep investing in this. I'll also share the adjustments that I've made. Okay, so let's go back to the portfolio. I have added the amount today, so I'll be investing more today. I'm investing consistently. I keep buying, so that amount is just reflecting right now. Let's go to the holdings, and let's sort this by current value. So we have, if you can see, what I've done is in this checklist, I've been tracking a few indices. And one thing that I would like to show you is that if you look at the Nifty 50, okay, let's look at the Nifty Bs. And then let's also see this over a 1-year timeline, right? So you can see that, of course, the market has fallen. It's back to where it was in around, let's see, what is this time? It's around May 2024, right? Over a long period of time, of course, you're going to see like a growing trend. Let's look at the last 6 months. If you look at the last 6 months, you have the best deal to buy the Nifty 50. So of course, why would you lose that chance to buy something at such a good price, right? Like that's the simple message that you have, is look at this and say, okay, now the second analysis, what I do is I typically see what has fallen more in terms of, this is an additional analysis that I just wanted to show you to illustrate an example of what I have adjusted in my strategy, right? So I just added IT, I added consumer, let me add bank as well. So I've just added the sectoral indices. So I've added IT, tech, so I have added consumer, I've added bank, right? So if you have seen my previous videos, you know that the only sectoral index that I invest in is the consumer base, because I'm a big fan of consumer facing companies. With the rising middle class in India, with the additional disposable income that Indians have, I think consumer base is the one that I really love. And one thing that I notice here is that compared to the index, you see that the bank has fallen around 6.51%, while the Nifty Beast has fallen around 11.94%, which is exactly the same or similar as how much the Nifty IT has fallen. But if you look at the consumer Beast, it has fallen around 15.68%, right? And this is where things get interesting, because it's actually one of my favorite places to invest. However, I had put it on hold because it was fairly moving in the same direction as the Nifty 50. Now that the consumer has fallen more than the Nifty 50, the only adjustment that I've made to my portfolio is I'm additionally again buying the consumer index. That's about it. I'm not buying any individual stock, I'm just buying the consumer index. So let's look into the consumer index, because all of the other holdings that I have, I've made multiple videos about it. You see the consumer index has now crossed around invested amount of 9L, which was much lower before, because I've been buying this. Okay, so let me show you what this is all about. And even before, in the past, when I was like buying individual stocks many years ago, I used to love the consumption companies. And if you look at the holdings of this particular ETF, you'll see that you have Airtel, you have ITC, you have Mahindra, you have HUL, you have Maruti, you have Zomato, you have Titan, you have Asian Paints, Bajaj Auto, Nestle. You don't have to think of individual companies when you say, okay, I'm just going to invest in the consumption trend in India. I know that the middle class is increasing, there's more disposable income, income is rising across the country. You know, there are people who are getting into IT, they're getting, look at your friends, you know, people who work in tech, they're getting better jobs, they're getting more salaries. If you were to look at good developers in Bangalore, they get paid the same as people in the US. So you know that they have this disposable income. Second thing, you go to people's houses, you go to your friends' houses, you see that they're buying, they're buying these protein bars, they're buying all of this healthy products, and they're buying super premium packaging. You know, essentially they're also buying packaging, not just products. So the trends are changing. People are, able to buy better cars, bigger cars, and so forth as well. So this entire basket is something that interests me a lot. And I think that this is going to continue to increase. Again, this is not an investment suggestion. This is the only change that I've made in my investment strategy. So same thing, keep buying. Additionally, the only change I've made is I'm also investing a little bit more into the consumer index. And once this investment size becomes sizable, then I could also think of letting go of all of the other holdings that I had, which is Hindustan Unilever, Bajaj Auto, Tata Motors, because these are anyways part of the consumer index. So people who have a question about portfolio overlap, first of all, I don't care that much about portfolio overlap. As you can see from my portfolio, I have like the universe in my portfolio. But yeah, I don't care that much about portfolio overlap. I think that's the honest answer. But a lot of these companies like HUL, if you can see, it's like 10% down, but they give me decent dividends. Not that I live for dividends, I live for returns or anything else like that. I don't care about those things like dividends, returns, or whatever. What I live for is how much have I invested in the index, like I said. So I would probably even consider of letting go these individual ones. The only reason why I haven't done that is because it's unnecessarily a process of taxation. Let it sit, let it go to the next generation, let it do whatever, right? It doesn't really matter that much because it's a very small amount. But given that I also love simplicity and I would like to see like a more simplified portfolio, as we go along. So I might reduce this as well. So that's my thought process. That's what I'm doing right now. My portfolio size has only grown, even though the market is dipping, because I just keep putting more money in the market. With that, I also want to say one final message. What matters the most is how you make your money and how much money you make. There's going to be a lot of these influencers who will say, I made money on this stock, but most of their money came from selling courses or selling something, which is not bad at all. It's just that you need to think that it's not that likely that you'll buy the same stock at the right time and still make the same amount of returns as that particular influencer did. So don't get distracted. as per me, what I am doing and what I will continue to do is keep buying the index. And I've shared the only adjustment that I've made is to buy additionally a little bit more of the consumer index. So that's all for this video, and I'll see you in the next one. Bye.